I just can't seem to get away from the real estate stuff. If this is not a sign, I don't know what is. Wolf Street, once again. Wolf Richter, wolfstreet.com. The next asset bubble cracks. It's so big, even the Fed is fretting. What? Commercial real estate, boom and bust cycle, heads south. Commercial real estate's 8-year boom reached such breathtaking levels that even the Fed has been pointing it out as one of the reasons for tightening monetary policy. The Fed is worried because of the size of the sector, its leverage, and what it did to the banks during the financial crisis. And now commercial real estate prices are heading south once again. What did Cliff High say? High-end real estate first. Does commercial automatically mean high-end? I thought about that. Well, commercial is always way more expensive than a regular house, just typical real estate. But high-end real estate is, again, high-end. It's high, the McMansions and those kind of things. But again, it's kind of sort of up there because it's commercial real estate. It's always way more expensive. Nonetheless, this isn't surprising. Commercial real estate, not looking good. Green Street's commercial property price index, which tracks the value of property owned by real estate investment trusts, fell 0.4% in May to the lowest level since May of 2016. So lowest level since a year ago, May to May. And it doesn't sound, just 0.4. That's not. Well, first look at this chart. Because this to me right here, see this? We call that the little camel's hump. I'm going to make that one up. This is the camel's hump. The camel's hump, not looking good. September 2007. Here we have this. Not a camel hump, but nonetheless, nice shot up. And, May 2009. Not good at all. Recovery, QE1, QE2, QE3, bond buyback, bailout, this, whatever. May 2016. And then, we're right back to that line. But this is an entire year, May to May. This hump is a year. What does it suggest? It's like a rainbow. Over the rainbow. You're going to have some serious fire sale prices on things. I've been telling you about this. And again, I'm trying to hold myself back. Don't get into the real estate stuff yet. We saw the one house. Beautiful. Gorgeous. Waiting. If I can get in this damn thing, I'm going for it. We decline your offer. Good. That's probably a good thing. Thanks. Now I can sit back and chill and wait. And I thought to myself, imagine if that property still doesn't sell. They had a much higher cash offer that they were declined. And then maybe a year from now, markets are way down, as in whether stock markets or not, whatever, but talking about housing markets, are way down. Whoever owns that house is realizing we should have took the freaking cash offer that one guy gave us. Call him back. Can we get a hold of them? Yeah, they already found a house. Or no, they're out of the market. They're waiting now. Their offer is now way lower than what you want. And then old J Snip 4 comes in. I made so much money, hand over fist. I'm looking into the future, pretending like I know how this is going to go. I'm pretty sure I do, but just bear with me. Me and a bunch of my subscribers, we made so much money on these cryptos. I feel kind of bad for you, but I'll give you the last offer I gave you last time that you kind of laughed at because you had much higher cash offer. I'll give you that, and even that's higher than where they should be right now. Will you want to work on that? Oh, okay. Wouldn't that be funny? A year, I still get the house like a year later. Whatever. Not even going to say that that's going to happen, but we can pretend sometimes, can't we? If the Fed can fake it until they make it, I can certainly fake it until I make it. And pretend that I know I'm going to be making all this money with these cryptos with my peeps following suit with me, doing the same thing. Now if we can just get precious metals to finally break loose, as Ice Cube would say, today was a good day. Or it will have been when it happens. Anyways, so said Green Street's commercial property price index, which tracks the value of property owned by real estate investment trusts, fell 0.4% in May to the lowest level since May 2016. This is not happening because there is some sort of crisis, and this is not a crash, as during the financial crisis when the spigot was suddenly turned off and liquidity disappeared overnight. Instead, it's a slow process that is happening despite super low long-term interest rates, enormous liquidity in the markets, and super easy financial conditions powered by yield-chasing, risk-blind investors. Right? So we wonder how this is going to end. One of the primary drivers of the decline are the values of retail malls that have been getting hit by store closings and bankruptcies of their tenants as brick-and-mortar retail is melting down. So and again, to date, this year, retail closings, etc., store closings are on record, as long as the trend even kind of continues at current pace to the end of the year, to be the worst closings ever probably recorded, I think, in the history of this country. So the sub-index for malls fell 2.8% in May and 5% for the past 3 months and is down year over year. Other weak areas are apartment buildings, but industrial space, such as warehousing, one of the beneficiaries of the shift to online retail, remains strong. Boston Fed President Eric Rosengren, one of the earliest advocates of unwinding quantitative easing, started warning about the CRE commercial real estate bubble last year. A couple of months ago, he gave a presentation on what commercial real estate could do to financial stability with some stunning charts, which I may have to pull up here and show you in a minute. We'll see. The significant decline in collateral values of both commercial and residential real estate was the root cause of the financial crisis, he said. Currently, financial institutions hold $3.8 trillion of commercial real estate loans. Banks, $2.02 trillion, or 53% of the whole total. Life insurers, $460 billion, or 12% of the total. Government-sponsored enterprises, as in GSEs, Fannie, Freddie Mae, and agency commercial mortgage-backed securities, $521 billion, or 14% of total. And non-agency commercial mortgage-backed securities at $544 billion, or 14% of the total. In terms of the banks, it's the smaller banks, less than $50 billion in assets, that are on the hook. They hold $1.2 trillion of commercial real estate loans. Larger banks, over $50 billion in assets, hold just $767 billion, or a little more than half of what the other ones do. So in other words, exposure to a commercial real estate downturn is going to hit numerous smaller banks least prepared to deal with it, and that's what the Fed is worried about. And if you recall, I told you from the article I was reading that, wasn't it JP Morgan? We advise the mid-sized banks to start merging with other mid-sized and smaller banks, scoop them up, because by December of this year, 2017, they're going to need to do so to basically stay alive. You don't suppose this has something to do with it, do you? Industry professionals have been expecting a downturn for a while. Commercial real estate runs in big cycles of magnificent booms and absolutely terrible busts. After about 6 or 7 years of boom, everyone starts looking for signs of the next bust, and these signs are starting to pile up. This shows up in commercial real estate transactions. Over the first 4 months in 2017, commercial real estate transactions dropped 17% year over year to $121 billion and have plunged 30% from the same period in 2015, according to Real Capital Analytics. Quote, those participants focused on the priciest deals are facing the biggest challenges in the current market. Large transactions, those over $500 million, experienced the sharpest decline. The quarter 1 2017 deal volume for these prices deals with, the 2017 quarter 1 deal volume for these priciest deals was down 44% from peak values. The deals priced from $100 million to $500 million had the next sharpest decline, down 10% from peak values. All deals in the smaller ranges have activity that is essentially unchanged. But he had some soothing words, ironically, by comparing the current situation to the financial crisis. Still, conditions are still far more favorable for the investors active in the 500 million and greater space in the current market than in the aftermath of the global financial crisis. Activity for the priciest deals fell from a four-quarter trailing peak of 231 billion in quarter 4 2007 to 1.7 billion by quarter 3 2009. So in the current market, it's not like the past where the big game disappeared. There are simply fewer mastodons out and about. So this is just an early stage in a drawn out, painful down cycle of commercial real estate that will maul, loan by loan, the smaller banks. And it will hit REITs and crush maul REITs. And eventually it will rake holders of commercial mortgage-backed securities over the coals. But unless something big and unexpected happens very suddenly and turns this into a crisis, this downturn, unlike the last one, will take its time. The credit cycle has already turned sour, and the debt slaves are beginning to buckle under their loads. So, speaking of these stunning charts, this was March 22nd. Bank failures in the U.S. What is this? Recession. Assets of failed banks, real terms. Real commercial property. I want to see if there's anything worth showing in here. Yeah, there's like 4 charts, whatever. I've said what I need to say. I can't get away from the real estate stuff. Almost every day there's something new. And never, not even once, is it like good news. It's not good news. So, what I want, precious metals, especially the cryptos these days, if I can get on and make some moves like I've been talking about, and I have made a few moves, get on Veritasium quickly, and I keep calling it Veritasium, just FYI, it's Veritas. Veritasium is really how you pronounce it. But if you hear me say Veritasium, I mean Veritasium. Got in on that, $6. It went to $26. It's been going from $60 to $90 I've seen, $100 even. Currently on that one exchange, which is kind of like you look at it, doesn't make sense. Am I buying it or am I selling it? I'm not touching it until a major exchange starts carrying Veritasium. That's when I plan on selling it. But again, if I can take that, flip that into something else, or ride it up on Ethereum or Bitcoin or both, or find another ICO, or as they call the initial coin offering, that's legit. Then maybe try to get on that. Again, I don't know. But the amount of initial coin offerings taking place in very recent times is insanity. I'm going to tell you, I'm just going to use that word because that applies. Insanity. Which ones are the real deal? Which ones are the scams? They all look great. I don't know what to do. I'm not touching them. I'm not touching them. Unless old Cliff High says, J-Snip, this might be one. That might be when I touch one. But right now, Veritasium was the only one. And I'm hoping to play the hell out of my hand on that one. And then sit back. It'll sit in crypto such as Ethereum and Bitcoin while I'm sitting back. And maybe I don't have to do anything except just sit back and wait. And say, I was able to pull that off when, Bitcoin was still $3,000 and Veritasium was $250, $260. And made this huge play with the Veritasium, dumped it into Ethereum and Bitcoin. And then I rode it from $3,000, and $250. They doubled, then they tripled, thinking that means the big number I got in from Veritasium doubled and tripled, essentially, because I put it into those. And that would be a fine play for me. I really hope there's a bunch of us that get to say, I bought a house cash, I didn't need a bank, and I use these things that I can't even show you because they don't exist. They're in the ether. They're online. I could just show you some numbers on my screen. That's it. Insanity, yet it is what it is. These cryptos aren't going away, apparently. And again, as you can see, new coin, new ICO. We're going to do this. We're going to do that. This one's backed by silver. This one might be backed by gold. Ooh, can I click on that? Sorry, if you're in the USA, you don't qualify. Damn. Well, here's another one. Sorry, if you're in the USA, you don't qualify. Damn. whatever. That might be a good thing. Maybe there's a reason why we don't qualify in the USA, because there's not anything to it besides someone just creating this out of thin air and saying, yeah, come get my coin, making it look good. Again, get ready for the scams. They're going to be out there. Webbot warned you way in advance. The ICOs are coming, and there are going to be a lot of frauds. You've been warned. So I'm going to tell you that now, because I got people emailing me, check this one out, check that one out. Guys, we've been warned. I'm not touching those right now with a 10-foot pole. Take care.